Boom, bang, bim. Folks, it's Nick Masunda here, video number 6, talking about stepped and level premium structures. Okay, now, question for you. Do you like getting misled? Do you like getting cheated, scammed? Okay, cheated and scammed is probably a little strong of language, but obvious answer to this question is no. No one likes getting misled, cheated, or scammed. So I intend to give you some information that's going to help you avoid those things happening to you when you're looking at or considering insurances, personal risk insurances, when considering stepped and level premium structures. Okay, so that's the intention of this video. First thing I want to do is explain what stepped and level premiums are. Okay, now the vast majority of premiums in the market and vast majority of insurers in the market are going to offer only stepped premiums, right? Stepped premium means the cost of your insurance is going to go up every year as you get older. Every year you get a policy renewal notice. It will explain what your costs are going to be for the next year, and they'll be higher than the previous year. Okay, the idea is that the statistical likelihood of you making a claim is higher because you're older. You know, statistical likelihood of you getting sick or dying or getting injured is higher because you're older. Okay, it's just a data-driven phenomenon, I guess, amongst insurers and the premiums they offer. So that's a simple enough concept to understand. Step premiums going up every year as you get older. The alternative is the level premium. Level premiums are not as common, okay? And they're generally only offered by retail insurers. That generally, some alternative insurers will offer them as well, alternatives to retail insurers. But retail insurers are distributed by advisors, insurance advisors and financial advisors. So they're the ones that would sell a retail policy. I actually used to sell retail policies when I used to work for TAL, a subsidiary of TAL. So that's how I became familiar with these different premium structures, right? So, level premiums. As the name suggests, they don't go up with your age each year, okay? They do start off more expensive than a step premium. This is the trade-off. So eventually, in the long term, level premiums will save you money compared to a step premium. But you have to be willing to pay more upfront in the initial years, okay? So that's the basic concept. Now, just on a quick side note, it looks like MLC and OnePath, a couple of retail insurers that offer retail offerings, are either removing some level premium options or planning on removing them anyway. So the level premium dream may be coming to an end anyway, but time will tell anyhow. So nonetheless, that's level premiums. Now there's I'll probably try and get some projections up on the screen here of stepped and level premiums so you can see the cumulative break-even point, right? So where if you're adding up the premiums you're paying each year on a step premium or a level premium, where is that point in time in the future where you've paid less for the level premium if that's what you had chosen? Okay, so that's obviously critical, okay, because that's what people are trying to achieve with level premiums. They're wanting to eventually realize a saving, okay? So I'll put some of those examples up on the screen. Yeah, now, there's probably 3 levels of sophistication or understanding, 3 tiers, I would say, with the way people analyze the pros and cons of stepped and level premiums. The first level is where people will simply go, step premiums are cheaper, level premiums are more expensive, I'm going to take out a step premium, without any consideration for how the premiums change in the future, or minimal consideration for how those premiums are going to change in the future. Okay, so that's the first tier. People who are in this tier probably have no interest in this video anyway, right? The second tier is where you've got people who are going, okay, I realize eventually the level premiums are going to be cheaper than the step premiums. I value delayed gratification. I'm going to have the discipline and the commitment to take out a level premium so I can eventually reach that point where I save money with the level premium, okay? That's the second tier. All right, now the third tier is where you're probably, I would say, more realistic. about the pros and cons, particularly the cons of a level premium structure, which is what I'm going to talk about next. But the idea of this video is to bring people from tier 2 into tier 3, where they've got a more pragmatic, more realistic understanding of stepped and particularly level premium structures, right? Now, so the upside of a level premium is clear, okay? You will hold on to that in the long term, you will save money in the long term. Pretty straightforward. The downsides that most people aren't aware of, okay, there's probably about 4. So the first one is that the break-even point of your cumulative premiums paid with a stepped and a level premium, the break-even point's usually further into the future than people expect. You know, you could be looking at 20 years before you actually start making a saving relative to the step premium that you may have taken out, okay? Right. Now, sometimes advisors are a bit misleading about this when they say you're going to, they try and put emphasis on the fact that the step premium will pass the level premium at around a 10-year mark, sometimes 8 to 10 years or so, they might say. Okay, that's not the cumulative cost. That's not the break even. That's just when you're paying per year, per month, less with the level premium than the step premium. What you want to know is add up all the premiums. At what point have I paid less in total for my level premium? That's the cumulative break-even point. Okay, so that's the first thing. Cumulative break-even point. Usually, you could be looking at 15, 20 years, right? Probably closer to 20. Again, the projections, I'll pop them up. We can have a look at that again. Okay. Second downside is that the insurer can change the level premium, okay? Which means they can review it and increase it whenever they feel that it's necessary to do so. And they definitely do and have done in the past, and some might even suggest that it's typical of them to do so. And usually the justification is that they have not been able to sufficiently project claims, right? So they say that they make a projection on what the claims will be. Surprise, surprise, there's more claims than they expected, and therefore they had to increase their premiums, even on the customers that were on a level premium structure, right? Okay, so that's the other consideration. Third thing, you might want to cancel your policy in the future. You never know what's going to happen in the future. You may want to leave the country. You may come across tough times, you don't have the costs, and you just don't want to have that policy any longer. Now, with level premiums, as soon as you cancel, you forego any future potential savings, right? If you were to go and take up another level premium with the same insurer or another insurer in the future, then they're going to start you from the beginning again, which means that break-even point is going to be another 20 years or so, you know, give or take, whatever it is. So you can't transfer one level premium from one insurer to another insurer, for example, okay? That's not possible. So it means you're stuck with that same insurer. You have to continue to pay the premiums. If you don't, the policy lapses, you lose that policy. And the fourth one is the opportunity cost, right? So if we look at one of these examples, we look at the premium. I'll just get it up for myself here. As an example, one of these insurers, obviously I'm leaving the brand out, so these insurers will remain anonymous. So yes, in this example, the starting cost, so this is for $1 million of life cover, annually with a step premium, $427 odd, okay? Annually with the level premium, $1,237. Okay, this is for a 32-year-old male or whatever. Point being, there's a difference in the price there of, you know, about $800. That $800, you could invest that. With compound interest, every year you could invest the difference. If you had chosen the step premium, you could invest the difference and you will have a certain amount of investments and earnings in the future. And that, with that in mind, that is going to offset any potential savings that you may have made from choosing the level premium, right? Okay, now if you had a lot of time, you could probably crunch the numbers, but I'm not going to do so. but you get the idea. So they're the downsides of the level premium structure that most people are not going to be aware of. All right, but I'll probably just say another little tidbit just to close off is that another reason some advisors like level premiums is that it's a good retention tool, right? If someone has a level premium and then come across some tough times 5 years, 6 years, 7, 8 years down the line, or whatever it is, longer even, of the policy, and they come to their advisor and say, hey, look, I'm thinking about cancelling my policy. The advisor is obviously going to remind them that, hey, you've had the policy for this many years. If you cancel it, you're going to have to start again, right? The longer you hold on to it, the closer you get, or the more cost savings that you make, right? Closer you get to break even and making those cost savings. So it's a great retention tool. And I'm not going to say it is in the best interest or not best interest of the client. There may be situations where a level premium would be suitable. Obviously, it makes it hard to change insurers anyway if your medical history has changed while you've had the policy and gotten worse. That's going to restrict your options. It's a case-by-case thing, but yeah, you probably get an idea of what my stance is on level premiums, having just watched this video. Although for the record, I'm not saying for or against, because ASIC doesn't like when you express opinion. So I'll leave it at that for this video, guys. Thanks for watching.